Happy Wednesday, traders. It's 8:02 a.m. Chicago time on Wednesday, the 10th of June, 2020. This is episode number 1773. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the market's overall showing risk on, but what's odd here is that safety and risk assets are climbing. The NASDAQ leading the pack up 89.5 points, 0.9%. But gold follows suit. Strangely, gold's trading at 1730 and 40 cents, up $8.5 at 49.49%. Up crude is weaker, trading at 38.28, not far from where it was yesterday's close, really. But on settlement, it's off 66 cents or 1.69%. Dollars off, trading at 96 and 4.5 cents, and so on and so forth. So at the top end of the board that I watch, we have the NASDAQ followed by gold, the cable, the yen, the bonds, the euro, and then we get the S&P. It's very strange. Everything seems to be getting bought this morning. Yesterday, the indices, the S&P put in a lower low and a lower high, but it shifted the point of control higher, so that's a caution flag there for shorts still. That's where we stand. One second. That's where we stand this morning. In terms of the overnight news, there are a couple of releases. Core inflation rate year on year in the U.S. And the inflation rate came in. The core inflation came in at 1.2%, in line 0.1% on the year for May on the general inflation rate, and that was lower than 0.2 expected. We're looking for the ECB's windows to speak at 9:30 Eastern, right at the cash open. We're looking for gasoline, oil, and distillate inventories at 10:30 today, and we're looking for the Fed rate decision this afternoon at 2 p.m. Eastern. We're looking for them to hold at 25 basis points. We're looking for their economic projections. The monthly budget's also coming out, and then it's followed by at 2:30 by the Fed press conference. The Fed press conference. Now, there's been an unprecedented move up in the equities, but that's the result of a huge influx of liquidity. If the Fed had continued printing the way it did in March and April, it would have increased its balance sheet by close to $20 trillion this year. That just gives you an idea of how active the Fed was. Obviously, it's not consistent, and they're backing off, but there was just a lot of money. And with the economy being tied, the general economy and general value of the economy being tied to the stock market, this is why you see a heavy emphasis on supporting corporations, supporting stocks, and so on. We've got to keep the stock market moving up in order to have an economy, essentially, is what that boils down to. If you have not heard the latest macro voices with Luke Gromen, it's a really good one. He goes over those details. That's the source of the information I'm providing. That's just a citation there. So that's where we stand. Let's take a look at what was expected yesterday versus what we actually got. Yesterday, the key trade idea is that it's likely to attempt to push higher. The extent to which it would push would be around 10 and 12. Remember, the 10 and 12 area, important in that it is a composite low volume node. It's a low volume node from Monday. It's also a low volume node and a mid from the overnight session. and the expectation is it would test up and then push below the overnight low, which was 31.90, and then start to shift down. I was expecting a reversal yesterday, and again, I outlined 32.10 to 32.12 as a key resistance area to lean against for a short. Let's see how that played out. Just for the sake of transparency here, we see that we had a clear open auction. I've lost my opening swing here. We have a clear open auction between 31.93.75 and 32.04.75. My throat's really dry. And we break the opening swing low and put in basically a double bottom. And my expectation is we are likely to push back up, consolidate, and break lower. That did not happen. Instead, we pushed up. We formed this really tight zipper here, pretty high volume zipper. And then we broke to the upside. We had our first key impulse to the upside for the session. And then we had our continuation up to 32.14. So it blew right through this low volume node, but then ended up getting trapped here for a little bit, creating an opportunity to do this, to look for a push, a failed push higher, and to look for the short right here and look for the rotation into the mid. And then, but the better trade, of course, this is the short would be a scalp following an impulse up and a range extension up. I mean, the bigger picture is that the trend is long on the day yesterday. And we are still trading off of this impulse, but there was a scalp short setup here, and then a structured long setup that squeezed quite a bit, pushed right back into this zipper here. Those of you who are convergent heard this already. Pushed right back into the zipper. This is a nice risk control setup here for the next big leg up. And we push into 32.1950, 32.20. Remember what I said about the 20 figure. The 20 figure has been in play at every 100 points, basically. 32.20, 31.20 didn't play so much. 29.20 was big. 28.20 was huge. And so here we are at 32.20, and we pull back, couldn't quite get to the mid, and then we rotate back up, and we have our extension move, and now and then at the close, we moved into a corrective pattern. We finished above the initial balance. We finished somewhat bullish. The market had a pretty decent taper at the top. It seems to have found its sellers. We still are below the prior day's high right up here, this green line, below the prior day's high, and we took out the bottom green line, which is the prior day's low, and we extended down. So the one-time framing up has ended, and we can start looking for a lower low or a lower high today, to start the one-time framing down and a new trend down, short-term trend down. That's what we're looking for today. But coming in, the market seems to be pretty strong, relatively strong across the board. I mean, everything is being bought from settlement except for crude today, and we do have crude inventories, and that might change things. But overall, it just seems to be buy on a very poor test below yesterday's the prior day's low, Monday low yesterday. So even though structurally we had a lower low, lower high, the point of control shifted up. So from down here, it shifted up on lower prices. What that means is even though the price action is saying that it's lower, the value is being accepted higher. So caution on a push through today's high. Push through today's high is likely to push us right through the prior high, 32.31 and a quarter, on our way to 32.50. That's what things are shaping up to be. Yesterday, despite the slightly higher close, the delta is quite flat. Let's shift this up here. And we'll see that in the overall delta breakdown chart. Again, the yellow line is 100 lots or better executing in a consolidated basis. In other words, we take trades that have the same order ID or tick ID and reassemble them to figure out what the large versus very large versus small participants. So the very large participants were bullish throughout the session, and so are the large participants. And the 9 lots to 1 lots were negative to flat for the session. Small traders were flat. We saw the same thing the day before. I went over this yesterday in yesterday's Trader Bite and said, hey, the bigger players here seem to be participating on the long side quite strong, and don't read that as, oh, the smart money is buying. We're talking futures here, and so the smart money might be hedging new shorts, and so they're having to hedge in futures those short positions to cover any upside in the form of options or whatever else. So that's coming into today. We did, at the end of yesterday, look at the delta. It was completely flat despite higher than zero prices or higher than the open prices. It just seems like yesterday had very balanced participation. The volume yesterday was pretty good, 1.2 million, 1.19 million. That's really good volume. That's pretty standard volume, and that's where that stood. Coming into the session today, the overnight session shows that the market immediately opened and made an attempt at the high, and it did take out the high, and then from there could not get a continuation trade. Instead, the Europeans came in right in here, and we had a small pop, but generally they were sellers. And the numbers out of France, industrial production, month on month came in at negative 20.1. That's really, really bad. But the forecast was for negative 21.3. It's still bad news, even though it beat the forecast by a little bit. It's still pretty bad news. The Europeans came in sellers, and we've held here. We are still battling in this 32.10 to 32.12 area. If you notice, we built another low volume node in the overnight session right in that area yet again. And so it's important that we keep that in mind. So we have a low volume node in yesterday's overnight session. We had a low volume node in that area, 32.10, 32.12 in Monday's day session, and we have a composite low volume node in the 32.10, 32.12, and guess what? We're trading 32.14. So I'm going to be watching to see how these guys respond to this area. If we see that they're pushing and pushing quite well, then we are looking at 32.31 being taken out, 32.31 and a quarter, the most recent high on this rally. And then we're pushing for 32.50, right? That's the next big area to test. On the order flow front, the market, the overall participants have tested down pretty good. There's a solid sell-off there in the overnight session. Pretty good collisions. Again, 32.14, 32.10. Pretty good collisions there. And then it's pushed back once it found its buyers. It's pushed back, and we're consolidating up here. 32.25 comes to us from this high that it put in, a lower high after it put in the overnight high. I'm not expecting this to stick around. I'm not expecting this 32.20 to stick around either. It's yesterday's high a day, but it's a decent exit. But overall, I expect it to push through. The overall view is that it's likely to squeeze higher, given the positioning, the posturing of money flow overnight, and the fact that we have already tested and found buyers in the overnight session. I mean, look at the taper on the profile here. It traded pretty well, and then it just tapered really strong, showing us an excess low. There's an excess low that starts somewhere in here There's an excess low that we've moved away from. And so structurally, the rotations are likely to continue higher as we don't have an excess on the high on the overnight session, and we're likely to squeeze shorts today. There was a glimpse of selling for a very, very short period of time, but overall, the market just cannot get enough stocks bought currently. And I don't have a feeling about it in either direction. It doesn't really matter to me. But overall, that's where we're headed. Now, before we get into today's action, there is, for those of you who are not part of Convergent and the weekly trade talks and the study halls and stuff, there's an opportunity to, if you wish to ask questions that I can get into detail, because the only time I'm interacting with you is right here on YouTube, and it's one directional, right? I'm doing all the talking. On Thursday, Futures IO is hosting me for an AMA at 4:30 Eastern. Will last about 45 minutes to an hour. That's Thursday, June 11th at 4:30, and the link, as you see below, is ft71.com FIO AMA. The link is also on your YouTube live chat, and it'll go out on my Twitter feed as well. If you want to grab it there, it's also in the YouTube video that you're watching. If you go into the video description, there's a link there. Sign up, come with your toughest questions. I'm happy to share whatever information, whatever wisdom that I can impart and share with you. And also, I'm happy to learn in case someone disagrees with the way I see things. Appreciate that. So let's get into today's action here. So for today, we're looking at really a market that's likely to reverse the action here. Here's the catch. The catch is FOMC. Somewhere in here, the FOMC is going to show up and they're going to throw a wrench in things. Okay. But initially, I'm looking for an open auction. The value is valid here. We're opening in range, in value. We're looking at an open auction in range, in value. So look for participation on the sell side to bring us back into the point of control to test the 3204 area. Looking for it to consolidate here, but overall, at some point, I'm looking for buyers to step in and push through the overnight point of control and to start to squeeze through the 3221. I'm expecting the market to push higher into the FOMC, and then from there, who knows, but more likely higher than lower. The FOMC is tasked with, has a mandate for employment as well as inflation, but really between you and I, the FOMC has a mandate to keep the stock market going higher, because if it doesn't, then dollar assets get sold, and then they have to print more or do something. So the treasuries are affected by the stock market indirectly, almost directly, and the FOMC is always intervening in the stock market. So I'm expecting that we are likely to push towards 3249.50, 3250 today on that announcement. The secondary, and I'd love a surprise. The secondary is an open auction that immediately squeezes higher, consolidates at the 32.15. Now we're above the 10 and 12 area. Again, 10, 12, key area here, key disagreement area. And then I'm looking for it to continue to squeeze to 32.21, push into this 25 area, potentially take out the overnight high, consolidate, come back to the middle, and chip chop until the FOMC, and then your guess is as good as mine on where we head from there. So that's scenario 2. Let's go back and put a 1 for scenario 1, even though it's obvious. So we're looking for scenario 1 here. Okay, those are the 2 key ideas for the day. It's NFA day. Okay, so FOMC day. The market is likely to make whatever positioning, whatever hedging, whatever moves it needs to make in the first hour and a half or so, and it's likely to stop and just hold. It is unwise for it to continue to move with such big and moving news coming. And so the idea is to do your business early on, probably stop, not trade beyond the first 2 hours, and then wait for the market to do its thing once the FOMC does its thing. Now, we could get a surprise and it could push down, but overall, the way this is set up with this balance in here over 3 days, the point of control just keeps shifting higher and higher and higher. So my anticipation is that the auction continues higher, and that's why both scenarios are looking to push up eventually, and then as I say, it's a random toss for the FOMC. But in either case, it wouldn't be wise to trade after the first 2 hours. So 10:30 Central, 11:30 Eastern. That's about the European close. Let everybody do what it's got to do. Let the market resolve the FOMC in 3 waves in general. Generally, we have the algos pushing, we have the counter move, and then whatever move happens next, that third move, that is likely to be the more real move. That would be the direction in which I'll be looking for pullbacks to continue. It could splash up, pull back, continue up, but it could splash up, pull back, flag, and then continue to drop. It's that third leg that I'm looking for after the FOMC, NFP, and these major releases. Okay, so take your time. Don't try to anticipate. Don't try to respond. You're not going to be faster than these co-located algos. You're not. These are machines designed to read the news and respond to certain terms in there, and it's very, very difficult to beat them. So let the market set up and then follow the money, follow the strength in the market, trade from the side of strength. Okay, good luck, and I'll catch you later on. Don't forget to sign up for the Futures IO AMA. Take care.